Welcome to Oregon Cash Flow Pro. My name is James Barber. We're back to answer Matt's second question. We started answering a series of his questions in our last video, which you can check out right here. And now we're moving on to his second question, which you can see right here. He's planning on taking money out of an IUL around age 65 or 70 and rely on the lapse rider. Does that affect your death benefit as the policy continues to incur interest charges and such? Now, I'm going to assume that he's meaning the Overloan Protection Rider, which allows you to take out money. It's generally, it depends on the carrier, but age 65 to 75, most carriers, age 75 is the minimum. There is at least one carrier that allows you to trigger that Overloan Protection Rider at age 65. But for the most part, age 75 is the soonest that you can trigger the Overloan Protection Rider. Now, does the Overloan Protection Rider affect your death benefit as the policy continues to incur interest charges and such? So the answer ultimately is yes, it does affect your death benefit. Anytime you borrow money from your policy, it's going to reduce the net death benefit because the death benefit is going to assume that it's got to pay off any outstanding loans with the remaining amount going to your beneficiary. Now, to use the Overloan Protection Rider, you have to borrow out 95 to 99% of your cash value in order to trigger that Overloan Protection Rider. That means you have a little bit of cash value left in the policy. And what the insurance company is going to do, they're going to turn off your policy. They're going to maintain a very small death benefit, however much that remaining cash value can buy. They're going to maintain that small death benefit until you pass away. And then that small death benefit will go on to your beneficiaries. And it doesn't matter what the underlying costs of that policy are at that point. The insurance company with that Overloan Protection Rider or the Loan Protection Rider, some call it different things, but that insurance company is giving you a guarantee that that policy will not lapse. So the underlying costs doesn't make a difference at that point. You've essentially opted to take as much of the cash value out of it as you can and walk away from the policy. At that point, you can no longer put new money into the policy, not as premiums. You can't pull any more money out of it. They will allow you to pay back some of those loans, but there isn't really any reason why you would want to necessarily, because you're not going to have access to that cash anymore. If you pay back some of those loans, it may or may not get eaten up by future costs, and that may or may not get passed on to your beneficiaries. So for the most part, if you want to consider utilizing that Overloan Protection Rider, essentially you're walking away from the policy. You're not going to touch it again. You'll just let it go until you pass away, and any little remaining death benefit will get passed on to your beneficiaries. Now, you may not actually want to trigger the Overloan Protection Rider. An IUL is great as a tool for income in retirement because you have the opportunity to earn on the money that's in your policy more than what you're paying to borrow it out. Case in point is all of my current IULs. I think I'm averaging just under 9% as a return. And I'm borrowing money out of them at somewhere between 3.5% and 5% interest. So if I can borrow money at 3.5% interest or 5% interest and earn 9%, I could do that forever. I'm never going to run out of money. So it's a great place to have that cash as you get into retirement, as you get older, and you basically want to manage your money less and less. An IUL is a really great place to have that money stored. So I hope that answered your question well. We'll be back for the remaining 2 questions in the next few videos. Thanks for joining me today. We'll see you next time.
I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.